What if one of the biggest short-term tailwinds for Bitcoin had nothing to do with crypto at all, and everything to do with Japan? The Bank of Japan just held rates at 1%, and that may sound boring. But in global markets, boring can be bullish. Why? Because keeping Japanese rates low helps preserve the yen carry trade, one of the most important liquidity engines in the world. Here's the simple version. When borrowing in yen stays cheap, big investors can use that funding to buy higher-yielding assets elsewhere, from stocks to commodities to Bitcoin. That flow of cheap money helps keep global financial conditions looser than they otherwise would be. If Japan were to hike aggressively, or if markets started to fear a sudden policy shift, the yen-carried trade could unwind fast. And when that happens, investors often rush to close positions, liquidity gets tighter, and risk assets can get hit hard. Bitcoin is especially sensitive to that kind of stress. So what does this mean for Bitcoin right now? It's modestly bullish. Not because Japan is suddenly driving Bitcoin by itself, but because stable Japanese policy reduces one source of macro stress over the next 90 days. That matters. Bitcoin tends to do better when global liquidity is supportive, volatility is calmer, and investors are comfortable taking risk. But let's be precise, this is not the main story. Bitcoin is still much more dependent on US interest rates, ETF inflows, and overall risk sentiment. So think of Japan's decision as a supportive backdrop, not the main engine. Bottom line, the Bank of Japan holding rates steady helps keep the global liquidity machine running, and that's a quiet positive for Bitcoin. If you want more fast, clear Bitcoin macro analysis like this, hit subscribe, and comment, liquidity, if you want me to break down the next central bank move that could move Bitcoin.